MACD is one of the most popular indicators out there. It is used by lots of traders from beginners to pros. But a question comes to mind when you think about MACD: can you really make money with only one indicator that is so easy to use? In this video, I will backtest the MACD trading strategy 100 times, so that you will not have to lose money on a strategy that doesn't work. Welcome to the Trading Journal channel, and please don't forget to subscribe and like for more trading and investing videos. The strategy I will test is called the MACD crossover strategy. We will use just the MACD indicator and the 200-period exponential moving average. Many traders criticize MACD because it is so basic and it can give many false signals. But at the end of the video, you will see the winning rate of the MACD indicator, and you can decide for yourself if you want to use it or not. If I lose money at the end of the 100 trades, we can say that the MACD crossover strategy is not profitable at all. The strategy we will use is a trend trading strategy. We will use the 200-period exponential moving average to identify the trend, and we will trade in the same direction of the trend. If the price is above the moving average, we can confirm that there is a positive trend. And there is a downward trend if the price is below the moving average. In our strategy, I will only look to buy if the price is above the 200-period moving average, and I will only look to sell if the price is below the average. So if the price is higher than the 200 EMA, we will go long when MACD gives us the buy signal, and we will go short when the MACD gives us the sell signal below the EMA. Don't worry, I will show you what is a buy signal, and what is a sell one. You know that MACD has two lines, the blue line, and the red one. It is a buy signal when a MACD crossover happens below the baseline. So we will go long if the blue line goes above the red one, below 0 point. Here, let me show you an example. You can see that the price is higher than the moving average. So, there is an upward trend. And, there is a MACD crossover here. The blue line crosses above the red one below the 0 point. It is a buy signal, so we will go long here. It was a nice trade and it was a winner. We made a 2% profit on this one. Before starting to test, I want to show you a short signal too. MACD gives a sell signal when the blue line crosses down the red one above the 0 point. In this example, the price is below the moving average, which confirms the downward trend. And the blue line crosses down the red one above the baseline. We will open a short position here. We lost this trade, since it hit our stop loss. But don't worry, it was the right trade to open. We will have winner and loser trades. Don't let the losers to bother you, since we only care about the long-term winning ratio. I will risk the strategy 100 times on the stock market. But you can use the same strategy on any kind of market, including forex and cryptocurrency markets. I will test two stocks, 50 times each. For the test, I picked the Microsoft and Walmart stocks. I will use the 1-hour time frame, and I will open both long and short trades. In the test, I am using a 2-to-1 risk-reward ratio. I mean that I will risk only 1% of my capital to make 2. So at the end of the test, we can still have a profit, even if we lose more than half of our trades. You should always use a risk-reward ratio higher than 1.5. In the backtest, I will only open trades that I risk only 1% of my capital. So, loser trades will cost me 1%, while winner trades earn me 2% on my position size. And I will assume that you will trade with the same size on each trade. Let's say that our position size is $1,000. We will make $20 if the trade we took is a winner. And we will lose $10 each time we have a loser trade. At the end of the 100 trades, we will see how much we can make with $1,000. Or maybe, we will lose money at the end. Therefore, you should always backtest your strategies to know your winning ratio. If you know your win ratio, you will be much more comfortable with the strategy you use. Because if you know your winning rate, you know if you should take the trade or not. If we have a profit at the end of the 100 trades, it confirms that our strategy works statistically. So, if it makes you a profit at the end of a backtest, you should trust your strategy. But don't forget that strategy is not as important as your psychology or risk management. Backtesting a strategy will show you the probability of winning before you open a trade. So, if you know that your strategy works statistically, you will not hesitate to open a position. That is why you should always backtest every strategy before you start to use them. You can create a basic Excel sheet like I did to keep track of your trades while backtesting. Same way, you should always keep a trading journal to see your winning rate in the long run. Trading is a probability game. If your strategy's winning probability is low, you are not going to make a profit. When I first started trading, I did not know the winning rates of the strategies I used. And, I kept on losing money on strategies that didn't work. After I started keeping a trading journal, I realized some of my strategies weren't profitable at all. So, I started backtesting every strategy I use. That is how I eliminated losing strategies. If you know the winning ratio of your strategy, you can predict how many winning and losing trades you will have in the long run. While testing a strategy, sometimes we have winning trades in a row, and sometimes loser ones. While testing this strategy, the most losses in a row were 5, and the most wins in a row were 6. As a disciplined trader, losses in a row shouldn't make you sad, just like wins in a row shouldn't make you happy. To be a profitable trader, you shouldn't let your emotions get to you. Like I told you, trading is a probability game, and there is no room for emotions. Before backtesting it, I was not trading with the MACD crossover strategy that I am showing to you now. Since MACD is so popular, I did not give it a chance to be profitable. After I test the strategy myself, I started using it while trading stocks and cryptocurrencies. If the result of the backtest is positive, it means that the strategy works well. Keep in mind that, usually you have a higher winning rate while backtesting. But the difference shouldn't be huge. If there is a huge difference between your backtest and real trading stats, it means that you are making a mistake somewhere. It can be about your risk management, or it may also mean that you are making a mistake while backtesting. If you are good with money and risk management, your real trading win-lose ratio can even be higher than your backtests. Backtesting can cause you your time, but it will save you money on the long run. So even if you can find the backtest results of most of the strategies online, you shouldn't trust them, and test for yourself. Don't trust a strategy just because some online trading mentor told you so. Check everything yourself before you start using them. Now our test is about to end, and I must tell you that results were better than I expected. I tested this strategy on many timeframes and on different markets. But, I believe this test will have the best result. But after testing it, you can use it on any timeframe and in any market out there. It took time to test the strategy, and I wanted to share this video with you, so that you understand how backtesting works. And you can save time while doing it, since you know how to do it. Now our test is over and the results are quite impressive. I took a total of 100 trades. 54 of the trades were winners and 46 of them were losers. It is an extremely good winning ratio, with a 2-to-1 risk-reward ratio. Because on the winner trades we made $20 and we lost only $10 on the losing ones. So at the end of 100 trades, we made $620 with just $1,000. It is a 62% profit, and it is a great winning ratio for a strategy. Personally, I stick with strategies that have a winning ratio, which is higher than 40% in backtests, with a risk-reward ratio of 2. And this strategy has a 54% winning ratio. I recommend you to backtest this strategy on a time frame and in a market that you want to use. I really wonder about your results, so feel free to comment your win-loss ratio. If you have any questions in mind, shoot them in the comments section. Please comment me on any kind of video you want me to create. Don't forget to hit the like button and you may subscribe the channel if you like. Thanks for watching.